Wait, hey, what's up, Piper? Where are you, brother? All right, seems like I'm all by myself. So, hey, welcome to the Morning Market Report on Piper Academy, where orange juice and coffee is our official drink. And you hear that? No complaints about it. Let's go. Let's do it. Welcome everyone to the Morning Market Report. Today it's OC taking over. Hopefully you guys enjoy it today. And we're gonna be talking a lot of stuff today because things are getting not just amazing, but also kind of like a tinfoil hattie today. Another stuff in the markets, it is that man, crypto it is just everywhere. It's green everywhere. But also, I mean, traditional markets are not feeling that good. Maybe they're gonna get a little bit of a flu. Well, then you can see it's becoming a digital gold. We'll see about that. Or is it just a Easter pump and rally sack? So also a little leg, a kick, and a little pitch in there. So maybe this could be very interesting. Still a little bit worrying, but let's go and take a look at what we got in here. So let's go to the news, guys. Hey, what's up? So I got you guys all the way up there here. I'm going to be reading you, hey, good morning. Let me get started with you guys because you guys are the most important. By the way, let me scroll over all of the way up and we have Ninja Glock saying morning, the very first one in the chat. Thank you so much for that, Ninja Glock. Crypto coin mindset username, my buddy in crime. What's up, buddy? Welcome, Alexandra G, the Mud Queen. Welcome. We also have Trading Tuition. What's up, brother? Welcome. Crypto coins and coin mindset. Sorry, I already shouted you out, my friend. Who else we have in here? Donado Cabrera. What's up, brother? Welcome. Who else we got? Right there, BC Portcorp. What's up, my friend? Welcome. Great to see you here. Wick's wife. Welcome also to Dop in here in the chat. Crypto Trades. Hey, what's up, my friend? Long time no see, long time no chat. Well, a little bit in the Discord, of course, but welcome, my friend. Also, Eric Willen. Let's do it. Eric. Let's do it. Harp mornings. What's up, brother? Guess who time is it? It is orange juice and coffee time. So again, the specialty of the show, right? Anybody gets it? No? All right, let's go. Who else we had here? JR, what's up, brother? Welcome to the show. And Brokoshi No Dinero, also welcome, guys. So we'll see the crypto market bubbles everywhere green. Everything is kind of like going like in the green. Let's go. I don't have a boom shakalaka, but I do have a
double kill.
A double kill, man. So let's do it. All right, so other than that, let's take a look at a couple of news because things are kind of like looking like crumbling at this point on the other side of the line here. Maybe in this side of the garden, the grass might be greener. Let's take a look at what's happening here. Dow Jones futures going down 1.40%. S&P futures going down 1.5%. Nasdaq futures going down 1.7. So we can see that we're going in average somewhere around 1.5 lower, right? In oil, 3.12%. I want to take a look at the oil. I don't have the chart pull up in here, but at the end of the class, we're gonna be taking a look at it just to start looking what might be happening because oil, I think, it has a crucial. Oh man, my hair is not fixed today. All right, because oil has a crucial aspect in what's happening right now on the global economy. And guess what? U.S. 10-year bonds going up. Is that good? Is that bad? Let's talk about it, right? So let me explain first. Let's get started from the beginning, right? So what are we seeing here? And I'm also going to go over a CME, Fed, and also take a look at a couple of other stuff. But before we get that crossover, I want to explain a couple of things, right? Let's go for the very basic. I know Piper has already explained this, but we're just really looking at the 10-year bonds, right? So AKA the 10W or 10Y, right? So the 10-year is a treasury bond is basically a loan to the U.S. government. Basically, you buy it, it's kind of like a receipt that said, hey, I loaned you this, so you're going to be paying it back with interest, right? So pay up, buddy, pay up. This is considered a safe investment or the safest investment in the world at this point, I would say. arguably the safest investment in the world, talking about fiat, right? So, well, I mean, because we could argue about gold, which we're going to be looking at today, which is just skyrocketing, buddy. I mean, it is just ching, 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 going up, right? It's not even giving us a chance to jump back in. By the way, we didn't know other than that possible entry, so we'll see that in a second. So at this point, talking about the 10-year bonds, the U.S. has never default those payments. Right? I mean, not at least outright. So that is a good thing so far, right? So what is it so important? This is basically a baseline for rates almost for everything, right? Mortgages, car loans, corporate bonds, even Bitcoin price swings, so on and so forth. Why? Because everything's tied to the global economy. In fact, when we talked about Bitcoin price swings, well, then that's what I don't like to say this, because I would love the Bitcoin just being a separate world. But this is basically what we want, right? This is like a necessary evil. Why? Because we need to start seeing, I don't want to say fiduciary characteristics, but more like reserve of value characteristics, right? More like gold and fiat, but still I think it needs to hold with the same rules that we already know, or we kind of like already know in the market, right? I mean, we all know that Bitcoin is came here to kick some bitches, right? But other than that, I mean, I think we will restructure this as we come. Remember, evolve and survive. And I think the economy, that's what it's trying to do, right, at this point. Well, let's move on here. What does it mean for the price going up of the yields, right? So basically, price goes up, the yield go down, right? So price goes down, the yield goes up. It's inverted, right? So what are we seeing in here? Well, the price of the asset, the view 10-year, it is going what? Well, we see it right there in the green, right? So the price of the bond is going up, so the yield might be going downwards. But we'll see that a little bit in a bit of a second, right? So kind of like in a perfect bubble, right? Because we're not taking into consideration this other red stuff. What would that signify? Just the 10-year bond. Why are we just focusing on that one? Because at this one, out of all of those, I mean, all of those also give you great information, but that one far to my, what is it at this point, left, I would say, left or right, whatever. This is my righty, so righty-tighty. There we go. That one in green, it is the one that usually sets the pace for a sentiment, global sentiment, all right? So I think that is, out of all of those, the most important at this point, and then we start tying bonds and tying nuts around it, right? So what is it signals? Investors usually are seeking safety, right? So that's why they migrate to those ones. There is less confidence in a risk investment like stocks or crypto, right? But we'll see that also because Bitcoin is holding. The Federal Reserve might cut interest rates soon. All right, so that takes us to what? Right, so that takes us to cutting rates. Are we going to be cutting rates or not, right? So this is why I'm going to be explaining a little more. So that is why the setup, kind of like how do we follow. Let me just maybe drop down a little bit my mic in here. Let me know if that is better. So this is basically why we tied, you know, like how is the economy doing? Basically the prices in here, and then we go, all right, so this is not looking good. This is in green, bad or good, right? So far, we don't know just yet because we need to see the rest of the puzzle, right? What's going to be the rest of the puzzle? Are we going to be cutting rates or not? This is not a for sure, right? This is just a possibility, right? What is happening here? 400 to 425 now, right? It's just, so basically the targets, so rising from 400 to 425, it is 10%, right? Which is over 1 day ago was 9.1, 1 week ago it was 20, and you can see how it goes up, a little bit up, sharply down, and farther, just tiny bit upwards here. But as we're standing here, just staying where we at, so no rate cuts, right? It is at this point 89% possible, right, based on the sentiment. So What is it telling us? So for that, we need to go in and talk about what could be the consequences of the 10-year bull, 10-year bond price going up, right? So borrowing becomes cheaper, right? And this is what the key factor is. If the price of the bond goes up, the yield goes down. So remember the yield, right? Which means, remember, the 10-year bond usually is set to start, right? Or starting guide for every other year. Car loans, personal loans, institutional loans, anything that needs to do with borrowing money. So how much is it gonna cost you to have that sweet cash, right? So let's just take a moment to take a sweet sip of my coffee in orange juice, right? Official drink on the Piper Academy. Hear that? No complaints. Oh man, I just want to see after the show when Piper gives me a call. All right, cheers, brother. And your name? Oh yeah, baby. All right. So what does that mean, right? So borrowing becomes cheaper, good for business and housing. Why? Because if you get more money for cheaper, well, then you might be inclined to get more money, right? And maybe if your budget was X, maybe you have that X times your fee. Well, the X can go higher because the fee is getting lower, right? So I think that is something interesting to see. Hey, Atlas Prime in the house. What's up, brother? Fourth dog billionaire. Smash that like, legend. Smash that like, guys. Quick reminder, Buck. What is up, my friend? Welcome. Crypto Princess in the house. Welcome, Crypto Princess. Great to have you in the show. Thank you so much for stopping by and sending some shout outs to the team in here. Appreciate it a lot. So borrowing becomes cheaper, right? What else is happening here? Banks might tighten lending. So that is also a little bit of a setback. Why? Because not all of us might can have or we could have a loan at that cheaper rate, right? Fearing of a slowdown economy, right? Investors may pull out from stocks in crypto, but again, we're gonna be touching on the crypto thing in a minute. Seeking security in bonds and in gold because gold it's been killing it. All right. So what would the global what did the global I don't know scenario looks like, right? I mean, global markets could trigger stocks sell off, right? Guys, again, I'm not saying this is going to happen. This is like just focusing right now on the 10-year bond, right? We're going to tie it now to what's going on in the actual current market conditions, global conditions, right? But so far, if we just see just the prices keep moving the way they are for the 10-year bond, U.S. bond, well, then we could be seeing the trigger stock sell-off, right? So sell-off on stocks plummeting. Guys, we're seeing right now some indexes just turning around, right? So, I don't know, sandcastles, we need to take a look at how wet is that sand because I don't know if it's going to help or not. Again, not trying to scare anybody. This is just if things keep going the way they are. But remember, that's why we got the Fed also to start regulating and try to fix both cost of money being borrowed and fix inflation, right? So U.S. economy, lower yields may reduce borrowing costs. We already know that, right? But signal upcoming slowdowns as we know, or as we've been talking about, global markets slowing down, U.S. economy going down. What might be happening to China? Well, if we talk about also tariff, right? Because we need to incorporate this we need to factor this into the equation. At this point, China is just such a big player that we cannot just ignore, especially since China has been selling bonds, right? So what could they maybe trying to do here? Well, if the tariff keep increasing, they're gonna get hit, right, by their exports, pressuring GDP, potential retaliation. We already have seen that, and well, despite we already have come to kind of like a stop to, I would say, to an unspoken ceasefire till today. I would say tensions are getting kind of like they're building up, right? They're building up. And if the investors seek safety, crypto could be a short-term area to be maybe jumping back in here. So to hedge, to possibly hedge inflation. Importance of crypto, guys, and I want to make sure that we're understanding this. All right, when we talk about crypto being a hedge, it doesn't mean that it's gonna move directly opposite. I wish at this point. All right, the market cap is not there. The market cap is just not there for crypto, right? So will we be seeing crypto becoming the hedge? I think it's already is, right? And not let's not talk about crypto in general. I think let's just call it by names, Bitcoin, right? All right, you might be calling me Bitcoin Maxi, but other than their market cap, guys, I just look at numbers, right? If I don't know, if whatever you will, Fartcoin gets a Bitcoin's market cap, I'm gonna be a Fartcoin Maxi, man. I don't know. I'm just saying there that right now the pressure, the eyes, right, and the trust are set on Bitcoin and not in Fartcoin. If you get what I'm saying, right? So just let's just go back and take a look at how we tie those two together, right? So we can take a look at right here on the first part. Let's just do a little bit of a recap how the price actions are moving. All right. And then how we're going to be tying it up to the CME Fed watch. Basically, are we going to be rising or not, right? So let's just factor in everything that we have talked, right? So Dow Jones going down 92%, 0.92%. S&P, everything's just going down, especially oil. So what does that mean? Well, when we have the down Nasdaq and S&P, everything just dropping sharply, which in this case we can see it after weekend, right? Just that CME gap playing out in there, while bonds, yield rise. Investors, that means investors are moving their money out of stocks, right? I mean, at the end of it all, we have a global market cap, right? Global value factor. So even when big industries pay taxes, they need to rotate their capital into electronic and physical, right? Because there is just no enough physical money, and just doing electronic money, it's just a little bit of a you need to have your physical money backing that up, all right? So we have a fixed volume that needs to be rotated, if that makes sense. If not, don't worry. In the next upcoming classes, we might be talking about that global market cap that we're having. Basically, a whole value of everything pushed by overprinting of fiat, right? Because we are not following the gold standard. The gold standard is still kind of like a pushing in the background because we see price of gold just pushing like crazy, right? And I mean, look at the price of gold. And we were expecting, there we go, either the first hiccup and a possible V-shaped recovery for then predict some structure. What happened to that structure? Well, we did not have the actual structure. While we have a big body candle going through, well, then we were expecting this V-shaped recovery. If you had it multi-candles or just single candle playing out, what you're looking at, it's at your flip of the ribbon. Flip of the ribbon, breaking through your entry, half of a position, up we go with that entry point. Let me just clear this up. And what does that mean with also gold going up? All right, everything that we've talked about, how that global market cap is rotating or is migrating from one sector to another, right? Again, it's just so interesting that we see Dow Jones, S&P, and Nasdaq in oil. We're going to take a look at oil and going downwards while gold keeps going upwards. That is telling us people, institutions are getting fearful, all right? So having just the pricing here, let me just continue and kind of like wrap it up very fast, right? So rising yields, and this is important. Sorry, rising yields, and this is what important what I was talking about. That means that the bonds are becoming cheaper, all right? Rising yields, signaling that investors might be selling bonds as well, potentially anticipating a higher interest rates or inflation concern, right? So if we're seeing that a potential potential institutions are looking for or anticipating higher interest rates, Well, do we have it just yet? Not just now. So should we be that worried? Not now. We should be cautious. We should not be panicking, right? It's not time to panic so far. In fact, never is the time to panic. Why? Because panic only clouds your sight, right? But looking at this kind of information gets you a cleaner picture on when and how things are rotating. Oil. Remember what we talked about. Oil dropping sharply indicates worries about economy slowing down. Why? The exact same thing that happened in the pandemic, right? When less economic activity, less demand for goods, less transportation, less airplanes, less trucks, less ships, less everything less, right? Which use oil, gasoline, diesel, or any kind of oil substract, right? That usually changes or it consumes of it, right? So selling or seeing the price of oil going downwards, the big investors are expecting maybe a slower movement downwards, right? Probability right now for the Fed reverse not change interest. So basically at this point, 89.7% of the rates, of the probability from Fed does not changing rates. That still tells us that, well, despite we're seeing recessionary signals, right? The same discussion that I was having with Piper, right? Sometimes I get too sentimental, right? You know that I'm a sentimental trader, but we need to keep our feet on the ground. Seeing recessionary signals means caution in the market, right? So a higher chance of no rate change means the market is confident on the Fed will be paused, right? So again, we see that becoming a better percentage. So what else at this point? What could we be expecting? The economy impacts. The stock continue to fall. Investors' confidence decline, leading to business and consumer to spend less. The Federal Reserve might be forced to eventually cut rates. And I've talked about this in previous classes. Emergency meeting, cutting rates. That's for me is gonna be, hey, this is the shot in the air, right? To announce the race, to announce it all, right? When we see the emergency meeting for Fed cutting down rates, well, then that is the off we go, guys, and we need to take a look at a couple of things in here. We have also Mark Dodge in the house. What's up, brother? Am I missing anybody? Hey, Average Crypto Joe, welcome, my friend. JR, what is up, bro? Retro Mike in the house, welcome. Darshan, Baba, what's up, bro? Welcome. All right, so final insights, right? Short term, what could we be expecting? Continue volatility and being cautious. That's everything that we can expect at this point. Why? Because we're seeing those recessionary signals, but we're not seeing at this point the recession or anything being broken. Everything's stretching, crackling, but we don't have to go now. We might have some relief rally, and that might be stabilizing us and maybe having what we know as a soft landing, right? So in the midterm, as long as we need to monitor Fed. I mean, that's for sure, right? So when they start cutting rates, we need to keep an eye on the rest of the assets. Basically, seeing Nasdaq, Dow Jones, and oil, see how they're playing out. If they keep dropping, it's time to maybe start moving your capital, doing some rotation of capital, right? But other than that, you just start pricing in more significant rate cuts in economy data as the data worsens, right? So again, as they cut rates, that is going to be our, like shoot in the sky to start the race. So the long term, well, the risk of recession grows in the market volatility. Also be reflecting that, right? So everything's just tied down. Well, I think that's enough for me explaining these two factors. Let's jump into the rest of the news. So far, let's take a look at if we have anything important in here. Not really. The 3 months bill auction. The 9 month bill auction. Not really something that I will be looking at. We just have the next Fed meeting. Crude oil stock change. Maybe this could be something interesting. But other than that, this is what we got so far. Nothing that I will be keeping an eye on today. I want to set back take a look at what's going on in markets because, guys, just if you don't know, I was disconnected because I finally got taken. I get married, guys, this weekend. That was a legal wedding, and man, I did had a great time. Talking about what is it gonna be doing, laying back down and I don't know, eating some popcorn and seeing what's going to happen. I do remember that we called this on Friday, right? On Friday, where are liquidations resign, right? Remember that I told you guys, and I went into the Bitcoin chart, and I know this is a little bit of a overwhelming. I'll zoom out in a bit, and I brought up the liquidations chart in here, right? The liquidation chart was telling me, well, then we were right here. If you guys remember that it was easier to go and liquidate these guys up here, which means a possible market manipulation other than going all the way down here. Because if I do remember correctly, these areas were not placed or were not there at that time. All right. So far, so good. We see the exact same thing in the liquidation charts in here. What is going to be easier for us to do? To grab them somewhere around 88, then go grab some at 86. There is a little chance. Let me zoom in here and come on. I know you can do it. Perfect. There's a little chance, all right, that we go grab this one first right here at 86. There's a little chance. Why? Because rising and breaking through previous highs, well, then that implements breaking through a lot of resistances, right? While sweeping the lows might be going against resistance, right? Because we are in a downtrend. And then after grabbing that liquidity, maybe bursting to the upside. But so far, the closest liquidity to be grabbed, the strongest closest liquidity to be grabbed, it's somewhere around 88, 87K, somewhere around those areas, or 87, 500K K areas, all right? So that is for the liquidation zones. Let's go into X marks the spot, right? So Kobayashi later here, breaking the 10-year no deal suggests back over 4.40% as equity futures fall sharply. So we already have talked about this. We have seen the relationship of it. And this is something important. Why this is telling you, hey, Danger Will Robinson. Danger Will Robinson, right? So Danger Will Robinson, we need to take a look at what might be happening here. And finally, Michael Saylor, man, this guy, it's amazing. MSTR has acquired 6,556 Bitcoin, around 555.8 million at 84,785 per Bitcoin, and has achieved BTC yield of 12%. A great yield, isn't it, man? I mean, I think that will be an amazing yield for the 2025. As of the 20th of, what is it? Oh man, it is March, sorry. At strategy holds 538,200 Bitcoin acquired for 36.47 billion at 67. Oh man, this is an amazing price per Bitcoin, right? I think that is something that we need to take a look at, how this strategy is being built up. And by the way, guys, if you want to follow a strategy that works, take a look at our Discord. We offer a average price of entry strategy, which is a DCA dollar cost average, right? So basically this strategy, I ditched mine because this strategy allows me to take profits at less risk areas and increase my entries are a better risk factor, right? So that means that it's not only push in, and guess where you should be going out, but it gives you a full-fledged go out, start over DCA to take advantage of cycles, right? So go check it out. Even if you don't follow it, go check it out. I think you can learn a lot from that strategy and even add some of it to your own strategy. So go check out the Piper Academy Discord. I think that's going to be a great thing. So boxes, boom, what, man? I don't know. Let me know. Oh, thank you, Baba Jazz. Really appreciate that. Anyone who runs for BTC on? Oh, but we are on long. We are in a long. So let's go into the charts here, and let's kind of like just start looking at what's happening, right? Remember this long trend line, right? It's not about the breakout, it's about the retest, our first entry, right? In fact, this was our first entry right here. Why? Because we're following two different schematics, all right? Let me show you. So we're also looking at this other schematic, the Wyckoff, here we go, accumulation schematic. What are we expecting here? Going down, a range, V-shaped recovery, and depending on how good and how, I don't know, well preserved this factor, these proportions are printed to the charts, well, then we can be expecting either a 70% chances of ranging or a little bit of a less opportunity. Nonetheless, we did range, so we'll see here, little range coming down, V-shaped recovery, and did we range? Of course we range. This is a huge range, right? So then how can we be taking advantage of that range? Well then, buy low, sell high, buy low, sell high, buy low, sell high, right? That's fine. But the most important area for me is going to be the spring. The spring, it is right below all of the rest of those peaks. And what else we do? Well, then we try to learn the spring. But if not, a better entry strategy on my behalf would be breakout retest, entering right here on the first lower outer range, right? So just so you guys keep in mind, this is not new. We've been talking about this range for a long time, and this right here was our first entry. And what else? We were expecting this next entry. This was our next entry right here. What happened on our next entry? Well, then we took something out, retrace, take us out in here, next entry, and weekend came. All right. So I left it as it is, and right now we are on big profits. Not only that, look at where we are at this point, man. We already have basically taken everything that we lost out of this dropping here, all right? So we're back at areas of high support. This is, for me, taking profit areas, right? In fact, remember I told you, this is gonna be take it and leave it. I mean, take it and run away. Why? What is the next thing that could happen in here? Let's go to the Wyckoff. This going up, and we are at the top. We are right here, right? We are right here. We could be rejecting, and if we reject, most likely, if we lose that previous support, we could be trickling downwards all the way down here, and this become, right, a flat, pause of bearish continuation. How would that look like? Sorry. That would look like exactly like that. Range, V-shaped recovery, your spring, your fake out. This is where we are right now. And if we reject, most likely we're going to go for a continuation lower. Remember, that's why we have another alert all the way down here. That's why we have a box. Do I think this is going to happen? Not really. But yet again, what's going on in here? Right? So, and this is what the topic right now is. Bitcoin becoming digital gold? I mean, everything's fluctuating out of it, right? I mean, we're going down for Dow Jones, we're going down for S&P, we're going down for NASDAQ, we're going down for oil, right? We already have broke out this in pieces. And where's that money going? Well, then I see two important things going up, right? I see Bitcoin going up and I see gold going up. So is that clear with that rotation of capital, right? We just tied it up with how possible is it for the rate cuts to happen, right? So we're not there yet. So this is time to what? To be cautious. In smart money, what is it doing? It's being cautious, right? It's moving its capital from one side to another, just like smart money does it, right? So exactly, bing bong, just going back and forth, right? So I think this is going to be something very important to take into consideration because at this point, I'm just taking my long, man. I do believe, or I want to believe, all right, and there's no way I can predict this right now because we are in rejection zones. But if we break out retest, we could be having an early spring like this, all right? If not, I still think that we need to go back and find one more before we break out retest. Why? Because of my theory of a prolonged or extended cycle. I want to have that final breakdown, but still, anything is possible. And at this point, I'm taking my money. I don't long tops. Well, then, what if, oh, see, you might be asking me, what if we're right here? What if you're right and we're right here? Wouldn't it be better for you just to hold it? Well, then I'm going to ask you, what if not? Right? What if not? What is my worst case scenario? My worst case scenario will be falling out of this zone, right? So I'd rather take my money, and then when it breaks out retest, I re-enter here, and then off we go, right? So I think that's going to be what we got right now on the markets. We have Army Piper in the house. What's about to go looking at my house? Hey, man, that's amazing. Hopefully you have a big AF fridge enough to store your coffee and orange juice. Of course, bro. Oh, great, my friend. I really, really love it. All right, guys. So that's what we got so far. Let's just wrap it up with price of gold and Bitcoin. Basically, a hiccup happened here, a possible entry. You should, if you follow the strategy, you should be on at least half of an entry here, at least, right? Or in the worst case scenario, right here after your big body candle breaking through the previous resistance and your flip of the ribbon, because the flip of the ribbon happened throughout the weekend. So we have a one missing candle right there. All right. So you should be going, you should be already into gold. By the way, I keep holding my gold. I have not yet fall out of it. So I've sold it, and I'm gonna keep accumulating until I see a big movement to the downside, and then I'm just speculating this, and then waiting to get in here to buy back and sell back again for a possible head and shoulders. All right, let me just leave this just for fun. Again, this is not something that I'm really thinking that it's going to happen, but I think that's going to be interesting to see how develops. All right, so let's go back and wrap it up with the price of oil. I should be having it in here. So where is it? Let me see. Where are you? Oil. There we go. The crude oil right here. Crude oil. And I don't have the other chart in hand where we have a couple of entries, but we were looking at this. Let me go to the daily. We were looking at some lows to be taken. And then I told you guys, if we start losing that area, it is time to start some sort of panicking, all right? And this was the area. And we did a fake out of here, still lower high, right? And then finally it did get bounced, big body candle going through. We are forming a bearish flag. Be ready for a possible rejection out of here. And if the Fed does not do something here, or if we don't see a pullback on the traditional markets, this could go much lower. How low? The next area of support, it's somewhere around 53.50. So just be careful with oil here. If you're going to be investing in it, well, then we are bouncing off a support. But again, we have a big trend line here, and then we have another big trend line there that holds as a resistance for the price of oil. Other than that, I mean, predictive ranges, well, then we bounce out of the purple one. Remember that I always put a little bit of money with a high leverage when we bounce or when we hit the purple lines, because I usually have a fast reaction. But that reaction is gone. And by the way, just for reference, I did not long the price of crude oil right at that support. All right, so I've not been trading oil for a little while. Other than that, guys, I think this is gonna be it for today. Quick advice: take your coffee. And by the way, no milk on it. It's just espresso or a very strong Americano, right? So put Americano, dun, dun, dun. And then put a shot of orange juice. It's weird, but stays fairly good, man. I mean, it actually caught me. All right. Other than that, guys, thank you so much for joining. And we have Luna Beaches Crypto. What's up, bro? Welcome, welcome. Other than that, guys, thank you so much for joining. And I guess we guys see you tomorrow on the next market report. But also today night, we have another session. We're going to be taking a look at a different topic today, new chapter. I think you guys are ready. We're trading with OC because we're going from zero to hero. Other than that, guys, thank you so much for joining. And as always, see you guys tomorrow. I don't know what they keep telling me. I don't know what they keep telling me. Ain't no school like Piper Academy. Ain't no school like Piper Academy. We'll keep that front line covered, even when we're dead and gone. We'll find a way to keep going, cause we gon' keep on rolling after wheels fall low. I know you hungry for knowledge, that's profit appetite. Classes in session, this for the Army Piper acolytes. Trade flag at the soul, train ready. What a line from OCI, former Mexican spaghetti. Yo, crunch crypto with a deep dive to reject dime. And if you like the visual powered by Car Prime, then you were part of that alumni, that's all spine. But if you have step, fall back to offline. We'll keep that front line covered, even when we're dead and gone. We'll find a way to keep going, cause we gon' keep on rolling after wheels fall low. Sound off. To get with them, the ZTS rhythm. Rip it, Alexandra. Yeah, that's my alumni, you know what I mean. That was awesome, dude!